Hello and welcome back to Global Value. In today's video, we're performing a fundamental stock analysis of Suncor Energy Inc., ticker symbol SU. So we're looking at Suncor today as a subscriber request. This continues on with the theme of looking at oil and natural gas energy businesses. Right now, Suncor is trading for $33.03 per share. And over the last year, their stock price is up 16.5%. So this is in stark contrast to a lot of the rest of the market, especially with the S&P 500 being down over the past year. So we want to analyze Suncor today to understand what are we missing? What could the market have possibly discovered about this business this past year that's led to this kind of outperformance? So over the last 5 years, however, Suncor Energy is down 11%. So they're down 2.5% compounded annually. The business is up 3 times, though, from its lows in 2020, which, unlike some other energy companies, actually came in November of 2020. Over 10 years, Suncor is down 7%, but going back prior to the global financial crisis, over the last nearly 18 years, Suncor Energy is up at a rate of 3.5% compounded annually. Keep in mind that their average dividend yield over this time would be in addition to this compounded annual return in their stock price. So total returns to shareholders are higher than this 3.5%. And currently, Suncor Energy is paying out a 4.4% dividend yield, which is nearly 3 times better than that of a dividend yield of an S&P 500 ETF right now. Suncor Energy is about $8 above their 52-week low. They're down more than $10 from their 52-week high. A little over 5.5% of their shares outstanding are currently sold short, and Suncor is a Canadian business. Right now they have about a 60 billion Canadian dollar market cap, which is about 44.5 billion US dollars. So for additional background about the business, Suncor Energy Inc. is an integrated energy company. The company's operations include oil sands development, production, and upgrading, offshore oil and gas, petroleum refining in Canada and the United States, and the company's Petro-Canada retail and wholesale distribution networks. The company is developing petroleum resources while advancing the transition to a low-emissions future through investment in power, renewable fuels, and hydrogen. Suncor also conducts energy trading activities focused principally on the marketing and trading of crude oil, natural gas, byproducts, refined products, and power. Suncor Energy Inc. was founded in 1917 and is headquartered in Calgary, Canada. So for our fundamental analysis today, we are performing the Select 6 analysis, taking a checklist-style approach of 6 standard financial metrics to come to a holistic and beginning understanding of Suncor based off of their business fundamentals. So this analysis is still a work in progress, and it's an opportunity to learn in public, so it will continue to improve and get better over time. With that said, let's get right into today's analysis. Starting things off with metric number 1, we want their average return on capital over the last 5 years to be above 14%. And there are 2 key reasons for this. The first is that over the long run, over the course of decades, a stock is likely to return approximately what its underlying business returns, and these business returns are going to be captured here by return on capital. The second reason is that the average publicly listed business earns about a 7% return on capital. So by asking for a benchmark of 14% or higher here, we can potentially build in some margin of safety for ourselves based off the overall quality of the business being about twice as good as average. Suncor, as an integrated energy business, is likely to see its returns on capital fluctuate with the overall pricing of the oil and gas commodities that it produces, which is pretty much in line with what we're seeing over the past 5 fiscal years here. In 2020, when the price of oil went negative, Suncor Energy's return on capital was negative as well. Since then, as oil and natural gas have increased in price, Suncor has dramatically improved their returns on capital. In 2021, they earned 9.5% returns on capital, and over their last 12 months, they're actually earning 22.5% returns on capital, which are far outpacing where they've been at in any of the previous 5 fiscal years. Averaged out over these last 5 fiscal years, however, Suncor is only earning about 4% returns on capital. They were dragged down significantly by some of these lower years, and especially when they went negative in 2020. And so these are returns on capital that are coming in below that of a typical business and well below that 14% benchmark we're looking for. So this is an X to start things off here on metric number 1 for Suncor. Next up, for metric number 2, here we're taking a high-level overview of the growth of their business. So we're looking for revenue, net income, and free cash flow growth over the last 5 years. And this metric is all or nothing in nature. Either all 3 of these are going to be up for this to be a check, or if even one of these is down, this entire metric will be an X. We'll also be including their last 12 months worth of numbers in our calculations here. So taking this high-level overview here, we really get to see the impact that 2020 had on the business, as their revenues were cut by more than a third, their net incomes went negative, and their free cash flows were negative. It does look like the business has significantly rebounded from that though, and over these past 5 years, Suncor's revenues have increased by 58%, their earnings are up by 61%, and their free cash flows have actually more than tripled. So they produced $5.7 billion worth of free cash flow in 2021, and over their last 12 months, they produced $6.8 billion worth of free cash flow. This is very strong growth across the board here for Suncor, so this is a check on metric number 3. It's especially great to see that their free cash flows are up so strongly, because free cash flow is really the lifeblood of any business, and a business can use its free cash flows to reinvest back in the business, make acquisitions, buy back shares, pay down debt, or pay dividends. So ultimately, a business's abilities to produce free cash flows now and until Judgment Day, discounted back by some reasonable interest rate, is what that business is going to be worth. So again, it's great to see such strong growth here for Suncor, and especially great to see such strong free cash flow growth. Next up, for metric number 3, here we're taking the perspective of an individual shareholder in Suncor by looking at the company on a per share basis. So we're looking for earnings per share growth over the last 5 years. So we learned in our previous metric that their earnings are up by 61% over this time. However, we still want to look at what they've done in terms of their shares outstanding. Likely a major benefit for long-term shareholders in the business. Over these last 5 fiscal years, Suncor has bought back 15% of their shares outstanding. So this is fantastic because when you purchase a share of stock, what you're really buying is a fractional ownership percentage in that underlying business. And so when a business buys back shares by decreasing the amount of stock that they have outstanding, they're increasing your ownership percentage in the business, which is ultimately going to increase the percentage of the business's profits that you're entitled to without you having to spend a dime. So it's almost as if the company is making a partial acquisition of itself. And so just like with any other acquisition, we want that business to be getting more value than the price that they're paying. Meaning that we want companies buying back shares when the business is trading below its intrinsic value, and it looks like a relatively attractive use of their capital. So to determine definitively if that was the case for Suncor, you just have to dig in and understand at what prices these buybacks were occurring. But between their increased earnings and their share buybacks, this has led to strong earnings per share growth for Suncor. Over their last 12 months, the business is earning more than $4.03 per share, and so this is a strong check here on metric number 3. Next up, metric number 4 is going to be very similar. So here we're looking for free cash flow per share growth over the last 5 years. Again, because their free cash flows are up so strongly, and with their 15% share buybacks, their free cash flows per share are also up very strongly. Over their last 12 months, Suncor has produced more than $4.82 worth of free cash flow for each share that they've had outstanding. And so this is another check here on metric number 4. So far through our first 4 metrics, we have 3 checks and only 1 X for Suncor. Then next up for metric number 5, here we're evaluating how the business is utilizing debt. So we don't want to be investing in overly levered businesses because during economic downturns, it's overly levered businesses that are going to be at the greatest risk of poor outcomes. So we want their net debt, which is their total debt minus their cash and their short-term investments, to be below the amount of free cash flow that they produced over the past 5 years. So Suncor added on to their net debt position in 2020 when the business's free cash flows went negative. So they had about $15.5 billion worth of net debt at that time. Since then, they've been steadily paying this off as their free cash flows have continued to increase. Currently, Suncor has $10.6 billion worth of net debt, and over their last 5 years, even with a year of negative free cash flows in 2020, Suncor has produced more than $14.2 billion worth of free cash flow net over this time. So based off of their historical abilities to produce free cash flows, it looks like the company is strongly cash flow generative and is using a reasonable amount of debt in their business. So this is a check here on metric number 5. Things look even better when we look at their last 12 months of free cash flow. Suncor has produced more than $8.6 billion worth of free cash flow over their last 12 months alone, meaning that the business would be able to pay off all of their net debt with less than 2 years worth of their free cash flows. So Suncor, on both an average and a current basis, looks very strongly cash flow generative relative to the debt that they're employing in their business. So another check here on metric number 5. So far through our first 5 metrics, we have 4 checks and 1 X. Then our 6th and final metric, the big metric of them all, we want their average free cash flow to their total enterprise value to give us a yield that's above 5%. If this is the case, this will give us a slight risk premium to the yield of the 10-year treasury and likely give us a reasonable starting point for evaluation of Suncor as well. So we're using their total enterprise value because it takes into account both their market cap and their net debt position, and it's going to give us a perspective of Suncor that's going to be more similar to as if the business were a private company. So right now, Suncor has a $55.5 billion total enterprise value, and we learned that over the last 5 years, the company has produced $14.2 billion worth of free cash flow, meaning that in an average year, Suncor is producing about $2.8 billion worth of free cash flow. So when we divide their $2.8 billion of their average free cash flow by their $55.5 billion total enterprise value, that gives us an average free cash flow to enterprise value yield of almost exactly 5%. So that's just coming in at that benchmark we're looking for. So on a historical basis of their free cash flows, this is a check here on metric number 6. Again, the business looks even better when we're looking at their last 12 months worth of numbers. They produced $6.8 billion worth of free cash flow over that time. So to get a current free cash flow to enterprise value yield for the company, when we divide their $6.8 billion of their last 12 months of free cash flow by their $55.5 billion total enterprise value, that gives us about a 12.2% current free cash flow to enterprise value yield for Suncor. So that's even higher than that 5% benchmark we're looking for, and that's better than 3 times the yield of that of the 10-year treasury. So it does look like Suncor is potentially offering us that attractive risk premium we'd ideally be seeking in comparison to the yield of the treasury, and that Suncor would likely be an interesting business to dig in and learn more about. Just because this is a check here on metric number 6 doesn't mean that you're going to run out and go buy the business. This is not financial advice, and this is just one of our 6 metrics. This analysis is meant to be holistic in nature, and even though these metrics are simple on their own, when they're combined together, they can be very powerful. And we've still got some interesting things to cover about Suncor. So then as a bonus, here we're taking a look at Suncor Energy's dividend profile. So again, Suncor Energy is currently paying out a 4.4% dividend yield, which is 3 times higher than the dividend yield of an S&P 500 ETF. However, people make mistakes all the time by blindly chasing dividends, so it's important to stop and look at the underlying fundamentals of a business like we've been doing, and to look to see whether that company's dividends are well supported by either their earnings or their free cash flows depending on the type of business. So for Suncor, we want their dividends to be supported by their free cash flows, and that looks like that was the case in 4 of these 5 fiscal years. The business did slash its dividends in 2020 when they had negative free cash flows, but unlike some other businesses, they continued paying out dividends and did not cut these totally. They did decrease these again slightly from 2020 until 2021. However, as the company's free cash flows per share have rebounded so strongly, the business has actually increased their dividends quite significantly. Currently, they're paying out $1.29 worth of dividends per share, which is back to where they were in 2019. And Suncor is producing way more free cash flow today than they were in 2019, so they have a much lower dividend payout ratio, while also being in a better leverage position, having less net debt overall. So it does look like the company is in a stronger position now than they were back then. And so while this is based off the past 5 years of their performance in terms of paying out dividends, it does look like their dividend should be healthy and pretty sustainable going forward into the future, especially if the business is able to maintain these levels of relatively higher free cash flows going forward if the price of oil and natural gas stay elevated similar to where they have been. Then everything we've covered so far is important, but there's something missing that in my opinion is the main reason to analyze Suncor Energy, which takes us on to using a discounted cash flow model to come to a potential fair value of Suncor Energy's intrinsic value. So it's worth being aware that a discounted cash flow model is just like any other model in any other discipline. Its outputs are going to be sensitive to its inputs. So here we're starting with an average of their free cash flows over their last 5 years to give us a more normalized perspective of the free cash flows that the business has been producing. Then we're using historical growth assumptions for how the business has grown their average free cash flows to be able to project these out over the next 20 years. So it's up to you to do your own homework here to determine whether or not these growth assumptions are going to be accurate and applicable going forward to give us a baseline projected estimate for Suncor. So if we use a growth stage over the next 10 years, where their average free cash flows decline at a rate of 3% annually, then we use a terminal stage for the 10 years out after that, where their free cash flows decline at a rate of 5% annually. If we were to add in Suncor Energy's tangible book value, which gives us an approximation of their tangible net worth, and we were ideally seeking a 15% rate of return, then it looks like a fair value for Suncor Energy is right around their current stock price at just about $33 per share. So there are some important things to note here, however. The first is that their discount rate would be including their dividend yield, so we would not be doubly counting dividends. So 4.4% of this return would be coming from their dividend yield currently. Secondly, as an integrated energy company and as a business that is a commodity producer, Suncor Energy's future free cash flows are going to depend heavily on the price of oil and natural gas, as well as the business's continued investments into renewable and non-fossil fuels. So there are some reasons why their future free cash flows may not be as predictable as the future free cash flows of some other types of businesses, like consumer staples, for example. And then also, even though we were seeking a 15% rate of return here, you likely still want to get a margin of safety on most of your investments, depending on where they fall within your circle of competence. Ideally, even on top of this 15% rate of return, which is the standard that Warren Buffett is typically looking for, you would still want some sort of margin of safety in the businesses that you're researching. So please be mindful of the fact that this type of analysis is not financial advice, it's not a buy or sell recommendation of any security, and before considering any potential investment decision, please consult with the properly licensed and registered legal and financial professionals. So in just a minute, we'll talk about our summary for Suncor Energy, but we have to address something first. What are some of the qualitative aspects about this business, especially those that support either a potential long or a potential short thesis of the company? So starting with some of the key points around a potential long thesis for Suncor. Number one, future growth opportunities from oil sands projects provide Suncor with several decades of crude production. Number two, Suncor maintains a strong balance sheet, reducing insolvency fears that plague pure-play oil sands peers. And number three, Suncor's integrated operations provide stable operating cash flow and limit the impact of oil price volatility, supporting the company's expansion projects. Then for some of the key points around a potential short thesis of the business. Number one, Suncor continues to dilute its share price to pursue expansion opportunities, despite the challenging economics in the low oil price environment. Number two, projected growth in oil sands production could lead to pipeline logjam issues, putting future pressure on price realizations and associated costs. And number three, Suncor's future oil sands growth projects are not economical in the current low oil price environment, and the timing of expansion is potentially highly uncertain. So hopefully that offers a potentially balanced perspective around some of the key qualitative aspects of Suncor Energy. Now it's time for our wrap-up. So in summary, Suncor Energy checks the box on 5 out of our select 6 metrics. On both an average and a current basis of their free cash flows to their enterprise value yield, it does look like the company is potentially offering us that risk premium we're ideally seeking in comparison to the yield of the 10-year treasury, and that the business would be potentially attractive to dig into and learn more about. It also looks like, based off their average and their current free cash flows, that the business is utilizing a reasonable and a modest amount of debt that's well supported by these free cash flows. Over the last 5 years, Suncor has bought back more than 15% of their shares outstanding. So this is on top of strong revenue, earnings, and free cash flow growth over this period. That's led to very strong per share growth for shareholders. Our only X of the day came on Suncor's average return on capital metrics, where it is apparent that because the business is an integrated energy producer, that its return on capital is likely to track alongside the price of oil and natural gas, especially as the business relies so heavily on oil sands crude oil production. However, that average may be potentially deceiving compared to where the business is at today, as Suncor has earned more than 22.5% returns on capital over their last 12 months alone, and that's far outpacing how the business has performed over these past 5 fiscal years. Then looking at their dividend, it does look like Suncor Energy, even though they cut their dividend in 2020 and again in 2021, that they've again increased their dividend payouts over their last 12 months, and that they're now even more supported by their free cash flows than they have been in any of these previous 5 fiscal years. Suncor Energy is also paying out a 4.4% dividend yield, which is rather high compared to many other businesses in the overall market. Then finally, performing a discounted cash flow analysis of Suncor Energy. If you've done the work and you believe that those historical growth assumptions are going to be accurate and applicable for the business going forward, then if you are seeking a 15% rate of return from Suncor Energy, then it looks like the business is approximately fairly valued. Even though this would be right on the edge of margin of safety here, there are caveats to this, some of which we covered. Another one I want to go through right now, which is that this would be far outpacing how Suncor Energy has performed over the past nearly 2 decades. So it's worth being mindful again that this type of analysis is not financial advice. It's not a buy or sell recommendation of any security. And before considering any potential investment decision, please consult with your financial advisor. This analysis instead serves as a beginning and holistic understanding to help you determine whether it's worth your time and energy to dig in and learn more about Suncor. One resource that will definitely help you stay up to speed with what's going on in the market and help you learn more about the business is Seeking Alpha. Checking out Seeking Alpha directly supports the channel as I'm part of their affiliate program. So most of you probably know Seeking Alpha as a source of community-written articles on different stocks. But over the past little while, they've actually become a lot more than that with their new offering, which is Seeking Alpha Premium. Premium has a number of different features where you can track buy, hold, and sell ratings on your favorite stocks. These ratings are from the Seeking Alpha community, Wall Street analysts, and Seeking Alpha's algorithm. You can see earnings call transcripts, investor presentations, SEC filings, and press releases all in one place. You can add your own margin of safety targets and get alerts for when your favorite stocks hit that level. You can get unlimited access to Seeking Alpha articles, and you can tailor your reading experience based on the type of investor you are. You can get 10 years of financial data on any stock to help you with your analysis. You can also import your portfolio into your Seeking Alpha dashboard to make researching easier. And if that didn't convince you, the best thing is that an annual plan is only $119. That's just 33 cents per day through my referral link down in the description below. Normally premium is $239, but if you use my link, it's 50% off. So check it out if you're interested. So as a value investor, you're ultimately trying to conduct this research as if you're going to own 100% of a business, and you can truly understand the essence of the company and understand what's important and what's not important for the business going forward. So through this deeper research, you'll learn more about the qualitative and the quantitative aspects of Suncor Energy, and you'll likely be able to determine for yourself what a reasonably appropriate intrinsic value for Suncor Energy will be. So with that said, that's it for today's fundamental stock analysis of Suncor Energy Inc., ticker symbol SU. So again, we looked at the business today as a subscriber request, and it fits the theme of looking at oil and natural gas energy businesses, which we've been doing for quite some time now. So I'm happy to make an analysis of the company. And if you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next time. Thanks for learning about Suncor Energy with me, and have a great day.